If you've been searching for mortgage rates online, you've probably come across those numbers that just seem way too good to be true. And in most cases, they are. And in many cases, when you go to the website like this, these are the most expensive options for you. So the question I'm going to answer for you guys today is, how do you compare mortgage rates all over the country? And I'm going to have a simple version for you. And I'm going to show you how you can do this with one application, one credit pool, and compare your loan with over 30 different lenders. So folks, my name is Dan Frio. I'm the host of the Rate Update, and I come in each day to explain to you guys what in the heck's going on with those and the whys behind it. Well, today I want to talk to those home buyers out there that are trying to figure out, okay, can I get a rate that's in line with me being able to buy a house in 2026? Or maybe you bought that house and you're trying to monitor rates to see, okay, how can I get a lower rate to maybe make that house a little more affordable? So when you do that, when you're searching rates, what most people do is they'll go online, and one of the biggest advertisers that come out is right through here, Bankrate.com. So I want to show you guys what most people go through when they're trying to figure out how to find the best rate out there. And this is also informative of those realtors out there and loan officers, because this is what your clients have to go through. So help them understand how they can get the best rate as well. So without further ado, folks, let's dive into this so I can explain to you guys how these are most likely your most expensive options when you're looking for a mortgage. So when you go down through here, I picked Bankrate.com because they're the biggest advertiser out there when it comes to mortgage rates. They're not a bank. They actually just sell this data. And let me explain it to you. If you go down through here, here's what they do. Okay, so what type of loan you're looking for? Well, let's say you're looking to buy your first house. You have 3 or 4% to put down, and that's all you really need as a first-time home buyer. Let's see what kind of rates you can get and see if it's comparable to maybe even what Mortgage News Daily has for you today. So if you go down through here, we're going to say we're going to purchase our first house. We're going to go down through here. We're going to keep everything else the same. I don't think the first house would be $740,000. So let's say this is $350,000. And we're a first-time home buyer, so we only need to put down 3%. And my credit scores, they're not quite there. They're about 680. So what kind of rate can I get? 5.625. That is amazing. It's amazing because if you go over to here, the rate on Mortgage News Daily on a 30-year fix is 6.2%. So how are you getting this good of a rate? Let me get my head out of the way for a second. Well, this is how. So what they do is they publish this rate right through here that looks fantastic, but it's really expensive. Why? Over through here, you scroll up, it's going to cost you $6,000. $6,000 in prepaid interest and also $1,300 in other fees. So you're going to pay over $8,000 to get that rate. And the same thing goes down all the way through. So if you're a homeowner or home buyer, how do you maneuver through this without using Bankrate.com and all those other sites? Well, I've created a special tool for you guys. If you go to the RateWatch, theRateUpdate.com, here's my website. I actually created this for those homeowners out there to not have to navigate all that stuff that we just went through. So what I need you to do is plug in your mortgage information up in RateWatch 2.0. What we do is we don't sell the data. I'll monitor it for you. Let me know what interest rate you'd be interested in refinancing. See if it makes sense. What we're going to do is we'll go over what your new payment was going to be, but we're also going to go over what the cost would be, because the cost is a huge piece of this puzzle. So if you're looking to refinance or you're looking to buy, please do reach out to us. We would love to help. So let's get over now and look at where mortgage rates should be going next and the whys behind it, because that's what most people visit me for, because I'm the Rate Update. I'm the host of the Rate Update. And my goal is to help explain to you guys what in the heck's going on with these. So let's get over to today's news. The economic news we have for this week, it's kind of not relevant until we get to Wednesday and Thursday. Let me explain why. The data coming in this week, ISM, nothing, servicing, PMI, nothing. Wednesday, we're going to get ADP payroll numbers. That shouldn't really have any effect on the markets, but we will get the JOLT index. What this gives us is the job openings and labor transfers. That might have a little effect, probably not. Next day and Thursday, we're going to get the initial jobless claims. I don't know if we're going to get continued claims. That's what I'm most interested in. Are the people getting let go able to get back to work? And then on Friday, we're going to get the real new unemployment rate. So where's this going to go? Last reading was 4.6. It is up, elevated a little bit, but even the Federal Reserve said, we know it's going to be elevated a little bit, but as long as the jobs market is below 5% unemployment, that means the markets are at full employment. So now let's get over to see how the markets are reacting to this, because we had huge news from the Venezuelan invasion that we had. I don't know how to reference it, folks. So please don't blast me down below. I'm just explaining to you guys the Venezuela situation that happened over the weekend. I thought the bond market and the markets would be a little more volatile than this, but right now the bond market's looking pretty good. So what I monitor on a daily basis to figure out what's going on with mortgage rates, right through there. It's called the mortgage-backed security market, or mortgage bond. Is basically what you're looking at. So that bond, as long as the bond price is going up, that's good news. Prices go up, yields come down. The bigger that number, the lower the rates are going to come. So that's what we're seeing in the markets right through here when it comes to the bond market and mortgage rates. Now we go over to the equity markets, and this is kind of a Cinderella story. What I call a Cinderella story is when we have the Dow Jones, the S&P, and the NASDAQ all up, and we got oil down, but oil is below $60 a barrel. That is fantastic when it comes to inflation, and I thought this would actually plummet with the Venezuelan situation, but that's not looking like it's happening right now. We have the 10-year Treasury right behind my head. It is down. Let's just, for kicks, go over to crypto. Crypto is at 93. This was at 80-something the other day. So fantastic market that we have so far. When it comes over to the Federal Reserve is going to meet in 23 days. What are they going to do? Because they look at all this data, the unemployment, the inflation, the tariffs, GDP, and everything else, to figure out what they're going to do with interest rates. And they have a huge role when it comes to interest rates. When 23 days the Federal Reserve is going to meet, what are they going to do? Well, there is an 83% chance they're not going to do anything. Okay, in the next month, in the March meeting on the 18th, doesn't look like they're going to do much there either. So doesn't look like there's a rate cut coming until maybe Q2 of this year. My biggest focus is going to be where January is going to take us and the whys behind that. So now if you're looking, I come up with this segment each week or each day to help those out there. What should you do? This is for loan officers, realtors, and home buyers out there. What should you do if you're closing soon or not soon? Okay, so what I want to call this segment is, should you lock in or float? Well, if you're a homeowner right now trying to refinance, I'm saying if this is saving you $300, $400, $500 a month, our average person is saving 1.3% on the rate and $566 on their refinance. So if you're looking to refinance, lock them in and just do it. That's what I would suggest, especially if you're in the 7% range. But if you're looking to buy or build, what should you do? Don't do anything. Okay, I think you're going to see numbers come in. Inflation might tick up a little bit more. The jobs report might tick up just one more, but I don't think it's going to be anything catastrophic. So the Federal Reserve is going to sit there and say, okay, this isn't all that bad. So they're probably going to stay on the realm of not cutting or keeping rates tighter for longer. But I think when the Federal Reserve starts to change its members, February through May, you're going to start seeing rates coming down from there. So I'm saying just float on here. If you're looking to close maybe in February, March, or longer, just float on in and make sure you reach out to us to get pre-qualified or pre-approved to make sure you're using the right program when you're buying that first house. So folks, my name is Dan Frio. Like I said, if you're a homeowner, home buyer, I'd love to help you. I'm the host of the Rate Update, but I've also been in this business for over 35 years. I'm licensed in all 50 states as well as Puerto Rico. I'd love to help you maneuver home ownership or having to track rates to try to help find you an opportunity of making that house a little more affordable. So hopefully today you understand and learned a little bit more on how to compare those rates throughout the whole country and also what happened with these and why. If you haven't subscribed yet, please do so over there and also hit that alarm button so every time I post a video, you do get an alert. That's it for today, folks. I'll be back at the closing bell to let you know how all this mess ends for today. But otherwise, God bless. Have a fantastic afternoon. And if you need some help, please reach out to us. We would love to help. Take care.